This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2017. They're one of my go-to exchanges. You can buy, sell, and trade cryptocurrencies on Uphold. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto. Not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Mark Yusko, who's no stranger to the show. Mark is, of course, the founder, CEO, and CIO of Morgan Creek Capital Management. Mark, great to have you on.
No, thanks for having me back, and excited to dive into the conversation. You know, there's just nothing going on in the market, so I don't know what we're going to talk about.
It's so boring. All right, Mark. We got a banking crisis going on, and I'd love to start with that because it seemed to have been triggered by folks who were trying to cut off crypto banking, starting with Silvergate, but a domino effect happened. And now we have a lot of banks getting exposed and with their balance sheets and the pain that they've been feeling from interest rate hikes and so forth. What is your take on that? And when do you see the end of this?
Yeah, so it's really interesting. You know, if you write the word crisis in Chinese, it's actually two characters, wei ji, and wei means danger, ji means opportunity. So yes, there's certainly a crisis, but in every crisis, you have the danger part, and we can talk about what that is in terms of the damage to the banking system and the collateral system. But there's also opportunity. And I think the opportunity here is quite robust. And I think we're seeing it particularly in Bitcoin, which despite a banking crisis and bank stocks collapsing as much as 100% in some cases, Bitcoin went up 30%. So wait, what gives? Store of value, flight to safety. But let's talk about the banking crisis to begin with. So you got the first part, which is, all right, was there a systemic or systematic clampdown on banks that were friendly to crypto? Chokepoint 2.0, it's been called. Yeah, I think it's actually pretty clear, right? I mean, that's not supposition or hypothesis or pointing fingers at the big bad government. It looks pretty clear that there were certain banks that were targeted early on, Silvergate and Signature Bank to start. But then something kind of strange happened in that Silicon Valley Bank, which really you wouldn't consider a crypto bank. It's more of a tech bank, a bank that was used by a lot of founders to back their businesses, but also used by firms like ours, venture capital funds, to fund capital call lines of credit. And, very large bank, very large business, huge growth market. And it got caught up in the second part of the crisis, which is this sudden realization. Now, why it's a sudden realization, I don't really understand, that these banks had unrealized losses on their government bond portfolios. And it all came to light on the Wednesday, a couple weeks ago, 3 weeks ago, when Silvergate had basically been crushed and put under, and Signature Bank was being crushed, and then there were some noises about some other crypto related businesses, but Silicon Valley Bank basically had a little mini bank run. Some people withdrew some capital. So, the way a bank works is they have assets, which are our money, right? Us as depositors put our money in it. It's no longer ours. It's theirs. It's the bank's. And that becomes their asset. Then on the other side, they have a liability, meaning they have to pay us if we want our money back. And then the difference between the asset value and the liabilities is the equity of the bank. And so in a normal functioning market, that equity value is positive and it accretes over time as they invest the assets, either make new loans or in bonds, and then they pay depositors a lower amount. So if they pay depositors zero, which we had for about 10 years, and you can buy government bonds at 3%, awesome, 3% risk-free, you lever that up, make lots of money as a bank. Banks are supposed to take those assets and lend them out to other people and charge higher interest rates, and then even make a bigger net NIM, net interest margin. Make a long story short, Silicon Valley Bank had this issue where some depositors took money out. So like, all right, we need to sell some of our assets and pay those depositors. Well, wait a second. Our assets went down in value because we bought government bonds. They raised interest rates. And so we have these unrealized losses. Well, now we're being forced to realize those losses. And they said, all right, well, we'll just issue some new stock to cover it. And everything was kind of fine. They had, $2.5 billion of new equity issuance to cover the $1.8 billion. And on a $200 billion asset, we're not talking a lot of pain, really a rounding error. And a couple people, and I won't point fingers, but everyone kind of knows who they are, sent these stupid ass, that's a technical term, memos to all of their underlying companies saying, get your money out. And they triggered a bank run.
Yep.
And bank runs are the one thing that can kill a bank.
Absolutely.
Right? I mean, fraud and bad management and all that can hurt a bank, but what kills banks is a loss of confidence and a bank run. Because the way a bank works, we've all seen the movie It's a Wonderful Life, is the money comes in, it doesn't get put in a vault and sit there. It gets lent out to other people, and then they deposit their portion, and then they lend it out again. And this fractional reserve banking system, I believe, creates wealth because you're putting money to work, increasing the velocity. But it requires confidence. It requires trust. It requires calm. Because if everybody comes in and says, I need my money, all of it right now, it goes away. So these idiots, in my mind, fomented this bank run. And the problem is, in the old days, we've all seen the picture. If you go to Wikipedia and look up Knickerbocker Trust, you'll see the iconic picture of a bank run. Guys in their suits and hats and the women in their dresses, and they're all carrying their umbrellas, and they're running toward Knickerbocker Trust, which famously was taking share away from JP Morgan. And JP Morgan is quoted as saying, I like a little competition, but they were getting a little too big. So he spread a rumor that they didn't have any money, and everybody ran to the bank, tried to withdraw. They had to shut Knickerbocker Trust down. Just coincidentally, JP Morgan was there to pick up the pieces for pennies on the dollar, and the rest is history, and JP Morgan dominates the banking system. So the same problem happened a bank, but the difference is, in the digital age, you don't have to put on your hat and drive to the bank and stand in line and wait for the teller to process your withdrawal. You hit a button.
Yep.
So $42 billion out of $200 billion. Now money vanished, got withdrawn. And now they're going to have to sell these assets that have unrealized losses. Well, that's the problem. So over the weekend, and it always happens over a weekend, right? This thing called the Committee on Economic Stability gets together every Sunday, and they've been doing that since 1988. It crashed in 87. And it's actually not a terrible idea, but it's a very small group of people: head of Secretary of the Treasury, the head of the Federal Reserve, the big banks, and they always decide what's going to happen. Well, the interesting thing 2 weeks ago Sunday was, yes, they said, all right, we're going to guarantee the deposits of Silicon Valley Bank, and we're going to allow Silicon Valley Bank to put those assets to the government at par. And everybody's up in arms saying, oh my gosh, that's terrible. They're only worth 80 cents on the dollar. Well, they're only worth 80 cents on the dollar if you have to sell right now.
Right.
If you can hold them to maturity, They're money good. These are government bonds. They're going to pay 100 cents on the dollar. So the government has a longer time horizon. They can do that. But what they did quietly was Signature Bank. Done.
Yeah.
Wait a minute. That's not a crypto bank. I mean, it has some crypto business, but it has a lot of real estate lending and traditional lending, and they shuttered that thing to it. And nobody was talking about that. So that's a really long answer to say it started with this surgical strike against crypto-friendly banks. Well, why would they do that?
Mm-hmm.
Well, because the same reason that Silicon Valley Bank went under, where did all the deposits go? Right up to JP Morgan. JP Morgan opened 40,000 new accounts in the week following Silicon Valley Bank. In fact, the Friday that Silicon Valley Bank was still alive, but it was looking bad, that day, a representative from JP Morgan called us and said, hey, don't you want to change your banking to us? Like, what? You're circling the grave before it's even, cold? I'm crazy. So $120 billion left small and regional banks, went to the top 5 banks. That's bad. That's anti-competitive. That's bad for small businesses. Then what happened? Globally, this started to happen. You had $300 billion leave the European banking system. So suddenly Credit Suisse has a problem, gets to get merged into UBS. Mm-hmm. And so you had this global bank run starting. And again, banking only works when there's calm, because it requires us all to say, yes, I don't need all my money today. I don't want to put it in the mattress, because if I put it in my mattress and everybody knows that I put my money in where are they going to come to my house and take it? Yeah. So we go to a very dangerous place, hence crisis, if we start to lose confidence in banking. But I think, to answer your question, I think we're at the tail end, because the people, I would argue, who are behind this whole situation kind of got what they wanted. The money flowed up to the top, and now they are magically saying, well, you're a crypto business, you can come to us. We'll bank you. Well, wait a minute. 2 years ago, you said you wouldn't. Well, now suddenly maybe we will.
And it's funny, Mark, because I was talking a bit about this. JP Morgan currently, I think they bank Gemini and Coinbase and some of these crypto companies. So it's the strategy, it's what you're alluding to. These smaller regional banks front run the bigger banks, but now they want that business. And I don't know who they're working with, short sellers and members of Congress.
So there's all kinds of theories, but the reality is pretty stark that these banks were attacked, and in many cases now have been buried asunder, and the deposits are fleeing up the food chain, and now those banks are going to offer services to some of the crypto companies. But here's the part that is really kind of scary. We know that FedNow, which is the trial for the CBDC, is coming in July. Mm-hmm. If, capital I, capital F, if you were trying to get people to be comfortable with something that most of us who kind of know anything about centralized systems like this, they're kind of pure evil. So if you're getting someone, why would anyone want pure evil, right? If you've watched Augustin Carstens, or whatever his name is, the guy from the BIS, talk about, yes, of course the government should be in control of how you spend your money, when you spend your money. That's our job. No, not your job. Not ever your job. That's a bad plan. So anyone who has any knowledge about decentralized systems versus centralized systems would say CBDCs are pure evil, like surveillance tools and control tools. Not a good thing. They're fiat, which is bad to begin with, on steroids, which is super bad. So think of the Terminator, right? So that's what this thing is. Why would anybody want that? Well, only if they've lost trust in the banking system. So if the Fed now says, well, these other banks, they're not safe. Look what happened to Silicon Valley. Look what happened to Signature. Look what happened to all these banks. They're all shutting down. Why don't you just put your money with us? It'll be safe. Put your money in the Fed. Put it in a CBDC. That is a dystopian nightmare that I really am truly afraid of. And I think, look, the people at the top, they're not stupid, right? A lot of people say, oh, they're stupid. Government, the senators, they're stupid. And the congressmen, they're stupid. And the president is stupid. They're not stupid. And if the plan is to concentrate the control and the power in this one place, then maybe they're really quite genius. Now, evil genius maybe, but perhaps there's some genius to that. So I think it heightens the need for opting out with a portion of your wealth into something like Bitcoin. I think it says you should have a contingency plan for, what do I do if they mandate? What if they said tomorrow, banks are illegal except for the Fed? That could never happen. Really? It certainly could happen. I'm not saying it will happen, but it certainly could happen. What if they said, your cash no longer works? Only CBDCs work. It's kind of what they did in India with Aadhaar, right? They basically said, your money no good. It's not good. So you got to use this digital system and we can control it. Now, India hasn't gone so far down the dystopian nightmare yet that Aadhaar is still pretty well received by the Indian community. But there was a period of time where it was pretty ugly, right? People who were living in a cash world, couldn't spend their money. They had to convert it somehow into the digital form. So I do worry that we're running down this path. And in fact, Ms. Lagarde this morning said, they're going to get there by October. And anyone who thinks this isn't a plan is just, missing the plot. This is absolutely a plan. This is absolutely a response. Now think about this. This is 14 years in the making, right? Bitcoin was created 14 years ago. The first 5-6 years, it was like, first they ignore you. A bunch of nerds and geeks playing with their magic internet money. I don't even know how it works. I don't care. Well, then they laugh at you. So 2016 to 21, it's like, a bunch of nerds and geeks, a couple $1 billion, whatever. Well, then they fight you. So we're in the then they fight you phase. And the then they fight you phase kind of started a year plus ago, working on this construct of how to fight back against a true decentralized system for a while. And I think the fight is about to get ugly, honestly.
Yeah, I mean, we're just seeing enforcement actions coming from multiple government agencies, certainly coordinated. Let's jump back to the Fed real quick, because a lot of eyes are on the Fed. Will they pivot or will they continue to pain and continue to raise rates? What's your outlook? I know it's a hard thing to predict, or
yes. It is. Well, it is hard to predict, and yet when I think about what they're doing, it makes some sense, and the collateral damage, if their intent is to do what I think their intent is to do, then you're okay with that. I don't think, my personal opinion, I don't think they anticipated what was going to happen with SVB, but let's talk about that. So from basically 2010 or 2009 really to 2021, you basically had a decade of, a little over a decade of zero interest rates.
Mm-hmm.
Were we really in financial crisis for a decade? No, right? I mean, you could argue that by 2013, everything was back to normal post-global financial crisis. But the problem that was trying to be solved was not the regular folks. It wasn't the regular economy. It was the fact that the banking system had been hollowed out. You know, the banking system, the real global financial crisis was bad, right? I mean, banks made really bad loans to non-existent properties in some cases, or to sliced and diced securities that weren't money good, that were never AAA, and they vaporized most of their equity. Okay, so that was a real crisis. So the reason they cut interest rates to zero was you basically say, okay, banks, now you can pay your depositors zero, so you can get deposits for free. You can buy our bonds for 2-3%, and you can re-liquefy your balance sheet. So we'll give you time to fix the balance sheet. And they did that. All right. So then now you've stuffed these banks full of bonds instead of loans. And you can see lending went down and new business formation went down, and all the things that you don't want to have happen in a growing economy happened because they forced banks to buy bonds and not do what they're supposed to do, which is to make loans and put money to work in the economy. Well, then they said, you know what? Balance sheets are okay. Now it's time to fix the income statement, right? Stock prices are down. Now we need them to go up, so we need them to make money. Well, how do you make money? Higher NIM. So if you raise interest rates, okay, one thing we know about banks is they don't follow the rate rises with their deposit rates. So interest rates today are 5+%. We're still getting paid 1% on our deposit rates. But their lending, actually, mortgage lending, 7%, 8% now. And so that's a big spread. So the banks, if you look since October, the bank stocks took off. They were going crazy. They were going up because they were now minting money. And that was all about the income statement.
Yep.
The problem was there was breakage. What do you mean breakage? Well, economic activity slowed down on the verge of recession. You had these unrealized losses in bonds, worst year for the bond market in history. But Mark, they're all unrealized. It's okay. Just hold them to maturity. Everything will be fine. That's actually true. And that's why I say this global financial crisis is not like the last one. This is not where the equity has been vaporized. It's only vaporized if there's a run on the bank, which I don't think they anticipated. So now, unless they're playing 4D chess and they fomented the bank run intentionally to weaken confidence in the banking system so that people embrace the CBDC, which is possible. I don't think that's the base case. I actually think they didn't really think SVB would go under attack and have this bank run, and that they would need to do all this quote unquote bailout, which is really not a bailout. So it's basically just transferring assets from the place where they stuffed them back to the lender of last resort. So they just reversed all the QT. So as the central bank was selling the bonds, they forced the commercial banks to buy them. And now they're just transferring back to their rightful home, just like in Japan and Europe. So I think, to answer your question, what's the Fed going to do? I think they would like to keep raising, to keep restricting liquidity, and to keep increasing the NIMs. But I do think they're likely to pause in the rate of increase. So my guess is the next meeting, they won't raise again. There are some that say, no, the crisis is so bad they need to cut. I don't see that. I did actually hear a pretty compelling argument yesterday from someone saying that there's absolutely a cut coming in the beginning of Q3, and that will coincide with the launch of the CBDC, again, to basically say, okay, now interest rates are going back to zero. The only place your money is safe is in the Fed. That actually, if that happens, then it's all sinister, it's all planned, and all bets are off. But that could happen. But I'm not there yet. But I think it's a compelling argument.
For sure. And I'm in agreement with a lot of what you're saying. It seems almost like the Fed is trying to break some of these smaller, weaker banks, maybe. And then the larger commercial ones,
sure.
JP Morgan, they seem fine. And, in my conversations with like Congressman Tom Emmer and Chris Giancarlo from the Digital Dollar Project, I just hear that CBDCs are going to flow through the larger commercial banks. That's kind of a theme that I've been hearing.
Oh, 100%. No, look, JP Morgan said it. I like a little competition. 5, too many banks. We don't need 5,000 banks, right? We need 5 or 6. And absolutely, you are correct. It is war on the smaller banks. Now, I think it's the mid layer. It's kind of like what happens when companies go through bankruptcy. The young people get to keep their jobs because they're cheap. And the people at the very tippy top get to keep their job because they're in charge. But it's that mid-level management, that 40 to 55-year-old group. You're out of here. You're expensive. Yeah, you're really productive, and yeah, you're really knowledgeable, and yeah, the company will be worse off without you. But nope, you're out. And I think that's the same thing here. Is the community banks, right? The ones that little communities need to have a place to put your money. I think those will exist. The top, clearly, this is all about concentrating wealth at the top and control. But man, those super regionals and like the Silicon Valley banks of the world, nope, they're taking money away from me. That money should be JP Morgan. And clearly, JP Morgan was calling us as an SVB client to try to get the money back. Now, the funny thing about that, 10 years ago, they told us we were too small and they debanked us.
Wow.
Said, go find another bank. And now you want me back? Yeah, right. Like I'm going to come back. I mean, it's not happening. Never. Not ever. So
let's talk Bitcoin. We're seeing the rally in the face of this crisis and the economic situation. How high do you think Bitcoin may go? And what do you think about Balaji's $1 million in 90?
Yeah, look, I mean, I love Balaji. I really do. I actually tried to partner with him when he left A16Z, and he was kind of happy in his semi-retirement. But I offer still open, Balaji, if you're listening. I would still love to partner with him. I think it was an interesting thought experiment. I will say, I'm trying to hedge here because I don't think it's going to happen, right. But I don't think it was a bad thought experiment. And the difference between Weimar Republic, Zimbabwe, Argentina, Venezuela, where you see these other types of hyperinflations, they're not the world reserve currency. The world reserve currency has some physical and structural advantages that make a super hyperinflation very unlikely.
Right.
Now, have we already had inflation? I don't think we have inflation. I think we have currency devaluation. Right? Everyone's like, prices are so high. No, that's not. The prices didn't change. The things didn't change. My house didn't grow. That hamburger didn't get any better. Shake Shack burger still tastes great. It's just the money we used to buy it got devalued by 50%. In 2020, from 2020 to mid 2021, they printed half the dollars in the history of our republic. 245 years, half the money. 2 years, half the money. Now, they've tried to take some of that back by turning money supply growth negative for the first time in 100 years. Just let that sink in. 100 years, really since the Fed was created, they have increased money supply, basically stolen our through inflation, which is basically currency devaluation. This time they went on steroids.
Yeah.
And, the cult of Kelton and all the crazy people think MMT is smart. Look, if printing money was the way to create wealth, everyone would do it. Everyone would do it. But that's not how you create wealth. You create wealth by depositing money into a fractional reserve system, lending it out, having businesses form, employing people, creating innovative technologies, etc. That's how you create wealth. And handing money to people is not how you create wealth. This whole UBI nonsense, that's not how you create wealth, right?
Yeah.
And they said, everyone increased their savings when we gave them money during COVID. No, that's not savings. That's bribery. You bribed people to stay in their house and be happy and not kick you out of office because you made the worst policy decision in the history of policy decisions. Idiotic. So that's to say 1 million in 90 days, highly unlikely. Highly unlikely. Not impossible, but highly unlikely. Where's Bitcoin? Look, I stink at short-term price predictions, and therefore, I'm like any good economist. You're supposed to say what or when, never together.
Wait a minute, Mark. You're not looking at the Fibonacci on the charts, and
No. I love TA. I look at TA all the time, and look, I believe in a bunch of stuff that people think I'm absolutely crazy. Right? I believe in astrology for financial markets, and here's a stat that you won't believe: if you simply bought stocks on every new moon and sold on every full moon. So you basically held money in equities half the time and cash half the time, every 2 weeks. Over the last 100 years, you'd have 1,400 times more money. Not 1,400%, 1,400 times more money. People say that's voodoo, that's bullshit. Like, no, it's human. Humans, and people are going to say, Mark, you are absolutely out of your mind. Humans are 70% water, okay? The tides are moved by the moon and the stars and planetary alignment. It makes sense that human moods, and I can verify this actually with a fact. So I thought I wanted to be a doctor growing up and went to school and studied biology and chemistry, which I think are the best training for investments, actually. So I lucked out. And worked in the emergency department because that's what kind of doc I wanted to be. And on full moon day, the 3-day period around full moons, we'd have 10 times more patients in the ED because people do stupid stuff. They literally do stupid stuff. And the same thing happens in markets. So the bottom line is technical analysis, like 200-day moving average, nothing good happens below the 200-day moving average. Ever. And surprises in any asset occur in the direction of where you are relative to the 200-day. So when you're below the 200-day, all the surprises are negative. When you're above the 200-day, all the surprises are positive. And that's partly narrative, that's partly momentum, but it's just the way it is. Because price reflects all of the information in the marketplace. And it's usually pretty good at it. So if you think about where Bitcoin is today, I made the case that June 15th last year was the end of crypto winter. Right? Okay. That was the end of crypto winter, and we entered crypto spring. Now, crypto spring doesn't mean straight up. Crypto spring actually means flat-ish for the 15-month period between crypto winter and crypto summer. Usually the market's pretty flat with a slight upward bias. And that's kind of what we had. I think we made the low on June 15th last year of like 17,800. And today we're at, 23,000 or whatever. And so that's a slight upward bias. Now everybody says, oh, but what about we hit 15,000? Yeah, we had Hurricane Sam. We had freaking idiot Sam Bankman-Fried and Caroline blow up the trust in the system for a few weeks and cause a lot of pain and a lot of liquidations of levered trading accounts. But that to me is no different than the fact every 10 years or so it snows in March in North Carolina.
Sure. Yeah.
Right? It should never snow here, but every 10 years or so we get a snow-a-cane. It's literally a nor'easter that swirls off the coast and dumps a bunch of snow in the middle of spring. So spring isn't fun. It's wet, it's muddy, it's windy, in like a lion, out like a lamb. I will argue May 9th, my birthday, my 60th birthday, actually, this year is the beginning of summer, crypto summer. Why do I pick that day? Well, it's 9 months before the next halving in February of next year. And that's usually the way it works. Whether it's May 9th or May 15th, it doesn't really matter. But I'm picking May 9th because I like that day. And I will argue that when summer starts, then we get the next parabolic move up. Now, what does that mean? Well, if you think about the halvings have been interesting in the sense that each halving has added a zero, meaning it 10 times the market cap of Bitcoin. So the first halving 10 to 100, then 100 to 1,000, then 1,000 to 10,000, and then the next one will be 100,000. But Mark, we went to 69,000, right? But that doesn't mean the value went to 69,000. That means that human beings priced a small amount for about 11 nanoseconds at 69,000 because people do get stupid, right? They lever up, and then you had all the demand from the ETF, and you had Sailor buying it. So yeah, we got to stupid levels, and then we crashed. Now we crashed 74% this time instead of 84%. That was kind of cool. So we had 84, 84, now 74. So that's actually a good thing because it means we're making higher lows. And so 100,000 to me is the next fair value. So today, fair value, according to Tim Peterson's model, somewhere in the low 30s. So we're under fair value. Maybe it's in the high 20s, but somewhere around that number. So I would be, as an investor, I like to buy things that are below fair value. So I'm an accumulator at these prices. I think 100,000 is the next halving level. And at that level, how far above do you go? Because you're always going to shoot through that when the momentum happens. Because the genius of the halving is, if you think about of all the things in Bitcoin, right? The fixed supply, the proof of work. I mean, all the things about it are just absolute mad genius. Which always says that it couldn't have been one person. It had to be a group of people. I mean, it didn't have to be, but my guess is it probably was. But the super genius point to me is the halving, because it creates an upward momentum in price that attracts investors. What do you mean, Mark? Well, if you think about it, if I got all my miners and they're all getting a certain number of block rewards, their price of machines is fixed, the price of electricity is fixed, and suddenly you cut the block rewards in half. Well, now a whole bunch of the miners go out of business unless price rises. So the price adjusts to keep the miners in business because we need the miners to secure the network. That's how it works. And so, but then what happens is anything that starts to move attracts attention, mostly from guys because we're hunters, right? The women are the gatherers, the guys are the hunters. So our eyes follow movement. Like if a bird flies over my window, I'm gonna look at it. And that's what we are. I use the joke that's true, right? My wife says, get the ketchup out of the refrigerator. I go to the refrigerator, there's no ketchup. She walks up, grabs the ketchup bottle. If it ain't moving, I can't see it. So it attracts mostly guys, but some women too. And it attracts investors and speculators and traders. And so the price starts to move more. And when there's limited supply and increasing demand, price rises. Well, then you get a speculative blow off and then a crash. And that's why you get the cycles. But then the next halving occurs and it pushes the price. So we keep making these higher lows. And that's why the value of the network is following this exponential Metcalfe's law curve. Actually, it's more like a parabola. And I think that is the genius of, well, there's a lot of genius things, but I think that's one of the incredible genius things of it. So 100,000, when do we hit 100,000? I don't know. Sometime between, Q4 of this year and Q2 of next year, sometime in that range.
Do you think that early, Mark? That you think?
Yeah.
Wow.
I mean, and again, it doesn't have to happen that way, but there's so many different things. Now, look, July is going to be really interesting. What happens when there is this CBDC in the US and a whole bunch of people flock to it because they're afraid of the banking system? But what happens if a bunch of libertarians and freedom, self-sovereignty people say, you know what? I'm outie. And a whole bunch of money flows into Bitcoin.
Sure.
The thing about Bitcoin that's hard to handicap is supply and demand. If you think about how many Bitcoins never trade, right? They literally haven't traded for year or years in some cases, and some will never trade because the multi-sig wallets have been blown up. But the bottom line is that the free float of Bitcoin is very low, which means it doesn't take much incremental demand to really spike the price. Now, conversely, it doesn't take a lot of liquidations to make the price go down. And there's conspiracy theorists out there this morning saying, this is all part of the plan. The Fed's going to crush Bitcoin right before July. It's going to zero. I'm like, okay, 430 times people have declared Bitcoin dead.
Yeah.
Literally dead. I mean, there's even a website that tracks it. It ain't dead. It ain't going to zero. The technology is not going away. I mean, it's just, I revel in this just using. So I tell a story that I made 2 venture capital investments. And I said, all right, I'm going to do one with traditional wire. I'm going to do one with USDC. So I'm going to use crypto for one. And so the one that did the normal way took 3 days. The one with USDC, 3 minutes. 3 minutes is better. 3 minutes is way better. And I'm part of this on-chain monkeys community, NFT community, promoting positive karma in the world. If I want to add OCM to my collection, I go to my Coinbase account, I transfer a little bit out into my MetaMask wallet because I don't want to keep it all there. And literally 3 clicks, maybe 2 minutes, I'm done. I don't have to wait for the bank to be open. I don't have to use a credit card. I don't have to remember any number. It's an amazingly positive experience. And that technology is just better.
Yeah.
It says, but we're going to have that same experience with the CBDC. Yeah, you will. It's fact.
But it comes with
a cost. And that cost is the government could wake up and say, yeah, too many bad tweets about COVID, your money is worth 80 cents on the dollar. Yeah. Or, Walmart paid us a little extra this month, so your money doesn't work at Target this month. Seriously, you could do that? Yeah, they could. I'm not saying they will, but they could. Crazy stuff.
So, Mark, we got a lot of enforcement actions coming against the crypto markets. You mentioned we're in the fight you phase. Binance got sued by the CFTC. Coinbase got a Wells notice. Do you think these enforcement actions continue this year is going to get more rough for crypto?
It's going to get more rough. Look, I mean, I said it, it's a 6-year cycle. And again, this is all made up based on the past. So 6 years of first they ignore you, 6 years of then they laugh at you. Unfortunately, 6 years of then they fight you. So 2022 to 2027, I think there's going to be a lot of enforcement. Look, the 3-letter, unelected officials, appointed officials are choosing to regulate through enforcement. That's not the way it's supposed to work. You're supposed to tell me the rules. Then if I don't play by the rules, you can enforce against me.
Right.
But don't not give me rules. And in fact, say, well, I won't even tell you. Like Coinbase asked, tell me the rules so I can follow them. No, we won't. Well, then how am I supposed to operate? And they chose to operate within the rules. And then they're like, you violated this rule. But that rule didn't exist. Well, we're saying it did. But you can't just say that. You can't change the past. I mean, I got it right here. And they're like, yeah, we can because we are who we are. So yes, I think it's going to get worse before it gets better. And it just shows one of the risks of this intermediate step between TradFi and pure DeFi, CeFi. That's a risk, right? Centralized organizations that I think provide a great service, right? My dad never, ever, ever going to own his own keys, right? It's just not.
Sure.
He's just not going to do it.
Okay.
He's very happy with his Coinbase account. Oh, then he doesn't own Bitcoin. You tell my dad he doesn't own Bitcoin. He thinks he owns Bitcoin. And you can say, no, you don't. That's Coinbase's Bitcoin and they're subject to regulation. Yes. But I think CeFi is a necessary step to ultimately get to where the decentralized future we need. And yes, the regulators can make it a problem. I just saw this morning, there's a bill trying to be passed that'll make it a $250,000 fine and 20 years in prison if you use a VPN for certain transactions. Now, maybe that's only for certain transactions. I didn't read the whole bill.
Sure, yeah.
Maybe that's only transactions with, sanctioned parties but that's a scary thought.
Yeah.
I mean, the fact that you could use software and go to jail. I mean, it's like that poor programmer who wrote open source code that someone else turned into a product and someone else used, and the coder is sitting in jail. Are you freaking kidding me? Code is speech, right? What law did he violate? But it doesn't matter. I mean, once enforcement is the norm and people normalize it, that's a dystopian nightmare. And look, all the Ayn Rand stuff is more, appropriate today. The Brave New World, the Fahrenheit, or Fahrenheit 57, 1984, Fahrenheit 57, all this stuff. It's kind of scary.
Yeah.
And again, I don't think we're fully dystopian yet, it was funny. I was doing a show the other day and I said some stuff that, people said, oh, you shouldn't say that. And literally as I was talking, the power went out and I cut off and they're like texting me, are you okay? Are you okay? I'm like, I'm fine. And I came back on, I went through my phone and I said, all right, but by the way, you guys can look out the back of my office. If I disappear, right, then you saw it. And I don't really think black hats are coming for me, but I do think we all have to realize that people at the top want a certain outcome. We who believe in self-sovereignty and the freedom that Bitcoin allows and a decentralized world allows is antithetical to that. Mm-hmm. And so the then they fight you phase is going to last a while. And to me, it's always like the difference between tax avoidance and tax evasion. Mm-hmm. You should do everything you can to avoid paying taxes.
Yeah.
Up to the line of the law.
Right.
Don't cross the line because that's evasion and you go to jail for that. But, if it says you can use a Cayman trust to avoid taxes, you should use that trust. If it says you can write off your interest, you should do that. Don't do bad stuff. But same thing here. There are no laws yet that say I can't own Bitcoin. Now, can they pull a 4533 Executive Order 6102 and say you can no longer own Bitcoin like they did with gold in 1933?
Yeah,
they could try. Kind of hard to enforce, but seems like with this VPN thing, maybe they're going to try to enforce that. But until such time, and look, there are even solutions then. You don't have to be a U.S. citizen. If the U.S. decides to cramp down, is every country in the world, or all 226 countries in the world, going to collaborate and make it illegal? I don't think so. I really don't. And there are other places that maybe more, and I don't want to move, and I love America and all that good stuff. But and that's why I am hopeful, actually, and I'm positive that we're not going to go down the total dystopian nightmare. But, you know, what do you say? Hope for the best and anticipate the worst. Isn't that the phrase? I probably need to run. I can't believe we've been talking for almost an hour, and I always talk too much. So thanks for having me back on, and I look forward to doing this again. There's probably questions you didn't get to.
No worries. Thank you, Mark. All this great stuff, man.
All right. Talk to you soon.